Global Business Update, Michael Wilson joins us now from Cape Town, South Africa. Good morning, Michael.
Asia markets marginally higher this morning, much cooler than expected inflation figures from the United States yesterday. Of course, equities to rise from China, Hong Kong, and also Australia. The only one that didn't was the Nikkei in Tokyo. The reason for that being that inflation is on the move in that particular country. As far as China concerned, its trade figures, imports and exports fell, but less than expected. Trade grew overall in 2022. Exports fell at 9.9%. They'd been expected to fall by about 10%. Again, it's just sort of pushing at this revival after the COVID lockdown. But one very important thing I've pulled out for you this morning is that the Chinese government is moving back appears to be moving back at least from big regulations on big tech companies, and instead taking what the financial markets call a golden share. What that means is it's not an enormous share in a company, but it's held by a government. And what it does is the government is able to therefore take decisions about whether or not to support the business decisions which the companies themselves are taking. So it's called a golden share. So it's a slight movement away from straightforward regulation and sanctions into a slightly more corporate way of guiding their big corporates in China. It's also likely that the China reopening will help the Hong Kong property market. Office rents are rising there, as are premises for high street stores, and people also are looking at the knockdown price of apartments and wondering whether they ought to be buying. So that's helping. Let's move to South Korea. They are the biggest buyers of luxury personal goods, and it's not the spending on those personal goods rose 24% last year. So it's per capita spending of about $325. That's an average per head, and this is also about increase in purchasing power, but also, as it's put here on the wires, outwardly exhibits social standing. In other words, showing off a bit with nice handbags and all the rest of it. The US recap then, I did tell you about those inflation figures that we had from the United States. Again, the future's not doing a great deal. The markets were enlivened by the inflation figures slightly cooler yesterday. That's risen considerably, and this is a way in which the South Koreans are actually proving the biggest spenders in personal luxury items. So let's go back to the United States then, and stock futures are relatively flat this morning. Again, a lot to do with something to do with the rise yesterday, obviously after those cooler inflation figures, but also because the big bank reporting season starts today, and no doubt the banks will have a lot to say about spending, about higher interest rates, and then maybe moving towards lower interest rates. So they will give a useful look at where they feel the economy's going. I'm going to move on to Apple CEO Tim Cook. He asked for a 40% reduction in his salary, and he got it. This is all part of a sort of touchy-feely approach that senior executives are giving. Institutional investors are not liking some of the rewards which their CEOs within their invested companies actually get, and so he's been acting straight away. So his compensation cut by 40%. Brazil now, and the new administration there, Lula elected a couple of weeks ago, and they're having to come to terms with a deficit of $45 billion. They want to turn that round in the next year or so. I say year or so simply because the central bank governor there said he'd be satisfied with a deficit of 1% of GDP by the end of the year. This will involve spending cuts. Yes, spending cuts, and also tax rises. Again, whether or not Brazil will be able to cope with that, we shall see, but that's what the intention is. As far as the UK's concerned, there's been a ransomware attack on the Royal Mail now, as if it wasn't having enough problems already. This is affecting overseas deliveries. Not exactly sure what the ransomware attack is, but the suspicion is it's a ransomware attack which is called Lockbit. It has Russian connections as well, but nothing has been confirmed from the Royal Mail so far. The UK is getting possibly a windfall. The Treasury is getting a windfall from falling energy prices, maybe as much as £10 billion. 11.1 billion as a result of maybe not having to pay so much in terms of the energy support scheme, but some of that will be taken up. So the net amount, maybe into the Treasury, maybe is £10 billion, and that therefore has a direct effect on the inflation figures, which should be 5.5% if all this is correct by the end of this year, by the end of 2023. And we should also mark that Christmas actually was very good news for the likes of Marks and Spencer, Tesco, and Sainsbury's. Most of those sales up 7% as far as those companies are concerned, and really it shows that maybe there's a bit of spending out there as well. Oil has extended its gains. WTI is flirting with $80 a barrel right now. A weaker dollar as a result of maybe the Fed slightly shallowing its rate of interest rate rises is helping that. Gold is testing the 1900 level. Basically because, it could go higher. Of course, it tends to be a safe haven when inflation starts to rise. We've seen it slightly cooling off in the United States, but it's felt that if 1900 were to be breached, then $2,000 an ounce could be next. And Bitcoin, finally, on those slightly cooler inflation figures, has jumped to about 19,000. It's the first time since last November it was kind of that level, up to $19,000, cooling, and also it's digesting the fact that lawyers apparently, as I was telling you yesterday, have reclaimed a bit of the FTX liquid assets, about $500 to $600 billion worth. That is the global view this morning.
All right, thank you so much for that. So does this mean that investors are looking at Bitcoin again after the FTX issue that is still going on? Does that mean that confidence is being restored? And let's also look at gold, for instance, at 19,000 pushing up to, at 1,900 pushing up to 2,000. Does that mean that prediction of probably hitting 3,000 might be on the horizon because crude oil prices are slumping and not looking any good?
Yeah, I would hesitate to bet about gold, quite honestly. All I'm telling you is what's happening right now. Yeah, I know. That prediction of 3,000. I mean, it might happen. I suspect it's probably slightly less likely, as it does appear now that what the United States was saying about inflation peaking in June last year at 9.1%, that might be correct, which means that if there's a downward trajectory towards inflation, then it makes the necessity to flee to gold as a safe haven less likely, but who knows? I'd hesitate to say that. All I can tell you is that now, if it gets to 1900, the market is sort of saying that 2000 could be next. 3000 to me seems a long way away. As far as Bitcoin's concerned, I honestly think that there is a long way to go. I mean, look, the Bankman-Fried trial is not going to be until October, is it? So we won't know the full extent of this. I don't think it necessarily makes Bitcoin more investable. I mean, I still think that the debate continues about whether it's a financial asset or not, or whether it's just like a casino. And I mean, as I've said, I'd like to be proved wrong on this. All I know is that I feel as though when the blockchain payment system is being used, then I'd feel more confident, and then we didn't notice it, then I'd feel more confident about things like Bitcoin and so on. But that's not to say that governments themselves are not pressing ahead, as you know, with their own cryptocurrencies, although these are very different. These are called stable coins, aren't they? Backed by foreign currencies and also by gold as well. So it's moving in that direction. But I just merely quoted it as part of the developing market day by day, really.
All right, two questions for you, Michael. First, I'd like you to a closer examination on ransomware and its impact on communications and businesses in the UK, bearing in mind that the Royal Mail is a critical national infrastructure. Yes, I know that ransomware typically it's a menace for a number of organizations on a daily basis, but for the Royal Mail, that's quite significant. And bearing in mind that it's also used as an avenue to extort money from certain organizations for asking them to transfer cryptocurrencies such as Bitcoin to an anonymous digital wallet, and the UK, now Royal Mail sending out an advisory as to letters and communication. What's the bigger impact for Royal Mail and, of course, the UK? And then going on to Tim Cook's requesting for a pay cut of up to 40%, and the fact that, yes, he's the one who's requested for it, but this could also indicate other internal issues. The board members are said to be asking for his equity reward to be based on performance now. What's your take on this? Just a broader view on this, please.
I'm looking at what the board was saying about Tim Cook, and they say that they're very pleased with his performance, and he has given Apple long-term confidence, and I think that's really enough. I think what he's doing, and let's face it, a 40% cut, he's still taking home quite a lot of money. I feel as though there is a move, as I was saying, amongst institutional investors to see the senior executives taking perhaps less out of their companies, but this is it's not quite a woke thing, but I mean it's the fashion these days, and I think Tim Cook, has taken the right kind of move, but he's hardly going to be begging at your local wherever people on your local streets as a result of losing 40% of his pay. He's still very well paid indeed. Ransomware, yes, the Royal Mail is a critical part of the nation's infrastructure, and again, we don't know a lot of detail about this, because one of the thoughts about ransomware is the less publicity it actually attracts, the better the negotiating thing actually is. And again, as a result of that cloak of secrecy, all I do know is that the idea of cybersecurity is something which all boardrooms are thinking about, of large companies are thinking about very, very seriously indeed. How they do that is down to their own security. But it just illustrates that every company can fall victim to this kind of thing. And it is becoming a bigger concern, I think, to senior executives, and quite right too.
All right, Michael, I just want to ask you this about the UK economy. With the sales increase, obviously because of the Yuletide season and all of that, does it mean that things are probably looking up? Does it mean that the economy has that level of vitality in terms of, purchasing power to be able to go out and spend on the economy? Does it look like a resurgence, or it's just another smoke screen that probably will give Rishi Sunak a little sense of triumphalism for now, and afterwards it's going to whack him down when he feels like he has everything under control?
I think it's the Christmas effect. I don't think it's anything more than that. I don't know, because I'm not a retailer. And I think you're right in a sense. You should reflect what happened over that particular period against what happens in the leaner months of January and February, to be absolutely sure about this. But it's interesting that all those, the two grocers and the grocer-stroke retailer, which is Marks and Spencer, saw revenues, sales increase by round about the same figure, around about 7%. So it does show that maybe people are saving up, for special occasions. But I still feel the cost of living crisis is not over, and I don't think the results are anything more than Christmas actually showing itself. And I think that retail is very good at reinventing itself, and clearly now is the time.
Yeah, absolutely. Valentine's Day is in a few days, so that's something special for retailers like Marks and Spencer and the likes to look forward to. Well, thank you very much, Michael, and have a great weekend.